Who is Michael Burry of The Big Short? Are his positions the best ones to have right now? Today I'll discuss Michael Burry's investing and trading strategies and whether I think his investments right now are the best ones to have. So stay tuned. Hi guys, welcome back to the Contrarian Investor. My name's Logan. I like to talk about videos and topics of success, investing, and having your money make money for you. So if you like those topics, please hit the subscribe and like button down below. So Michael Burry is really best known for being portrayed in The Big Short, which is both a book and a movie. The book was originally written by Michael Lewis, and the movie was made starring Christian Bale as his character. And Michael Burry gives very few interviews, so it's easy to miss him and not know who he is, but he's had a very different route into Wall Street than most people. So in his childhood he lost his left eye at the age of 2 due to cancer, and he describes himself as a very introverted, secluded character throughout school. He preferred swimming in high school since it required little social interaction and just performance. And this is an important thing to keep in mind too, because this is how he likes to invest. He likes investments just based on fundamentals and value rather than, noise and hype surrounding a particular company. He went into medical school, and he still maintains his MD title, but he's actually never worked as a doctor. He had a residency that he didn't find particularly, encouraging. He was labeled as bipolar by the doctors who were teaching him, and so he really didn't like that very much. He started Scion Asset Management in 2000, and he initially produced immense 30 to 50% annual returns by picking undervalued, overlooked stocks with an ick factor. And the ick factor is really important to keep in mind because this is usually what he looks for in a company. He looks for companies that are commonly, despised by investors and not commonly recommended by, say, investment advisors. Companies that usually aren't included in index funds or mutual funds. These are companies that have high potential for undervaluation of their shares just based on these, outlying factors when the fundamentals are actually very strong. And so Michael Burry began reading and looking into mortgage-backed securities in 2003, and then he became convinced that the lenders had lost their minds in 2005. So long story short, pun intended, he bought credit default swaps to bet against housing, and he won big for him and his investors. He describes this bet as laying out his bet and waiting for the casino to change the game. Prior to this, he was actually mostly stock picking and not shorting, so it's also important to recognize that he's not, usually bearish on markets. He's usually looking for unique situations and unique value situations to buy into. So he's usually actually not a shorter or, commonly bearish on the markets. And then back in August, September, and October of last year, I saw a lot of YouTube videos slamming him for his disclosure of his recent positions in GameStop, Tailored Brands, and other beaten down retail stocks. And so it's important to realize that this is nothing new. It's a very typical reaction by other investors to find what he's doing kind of repulsive and just stupid. But that's actually what his investment strategy has been pretty much all along, is looking for unique situations and equities with an ick factor behind them. And this is definitely nothing new. Back in 2006 and 2007, he was heavily ridiculed for shorting the housing market because housing was seen as the most, stable investment on the planet. So, it just shows that common, going with the crowd rarely pays off in the end, and going against the crowd, being a contrarian investor, really pays off usually. And Michael Burry is definitely the epitome of a contrarian investor. He only manages $263 million now with Scion Asset Management, and he only has 3 clients. So it's a very, niche kind of asset management that he runs. So yeah, let's look at his current portfolio now. So this was last updated in mid-May, so it's important to realize that this could have changed since then. But yeah, his largest position is still GameStop at 18% and 15.3 million, and then Jack in the Box 12%, 10.5 million, Corvo 12%, 10.2 million, Facebook 11% and 10 million, Maxar Technologies 11%, 9.6 million, Boeing 10%, 9 million, Discovery 8%, 6.8 million, Michael's, the arts and crafts store 6%, 3.3 million, and then Tailored Brands is now 3%, 2.4 million. And then he also has short-term calls on Las Vegas Sands, Wynn Resorts, Foot Locker, Corvo again, and then Cracker Barrel. And it's important to realize that this only is a total of 85 million in capital, so he still has 178 million, or 67%, that is not disclosed. So he probably has this either in other investments that he doesn't have to publicly release, or just sitting around in cash. And his portfolio has changed significantly in the last year, so it's safe to assume that these are short to mid-term. And he also did this heavily before he was well known, for shorting housing. So this is nothing new for him to be kind of a trader or short-term investor, at least seeing unique opportunities, swooping in, buying it very low, and then selling it, even just a few months later. So that's nothing unique for him. So the calls tell us a lot that he's predicting a spike in consumer behavior in restaurants, casinos, and retail in the short term. GameStop for the last year has consistently been his top position since August at least. So he's betting heavily against the upcoming console cycle. And then many of these companies have the ick factor that he likes to talk about. Michael's GameStop is probably the one with the most ick factor behind it. Also Boeing, with their 737 MAX, they've been, an ick company the last few years. Tailored Brands is definitely one as well. And then a lot of them are just kind of unknown, not really recommended that much, like Corvo, Jack in the Box, Maxar Technologies. I mean, I'd never even heard of Maxar Technologies until I looked into this, so he just looks for unique situations. Yeah, many of these companies could be temporary equities for him. He's tended to be an opportunistic to short-term investor in stocks. So, with him trimming back on Tailored Brands a lot recently, I wouldn't expect that to really be a particularly long-term investment. But I mean, maybe he'll keep it for a little while longer. Michael's, that'll probably not be a long-term investment. Yeah, Google was a very short-term investment for him back. It probably only lasted about 6 to 8 months that he was in Google, but he recently sold that and bought Facebook. So, I mean, Facebook could be a temporary investment. I mean, GameStop is probably the only one where he's in there for, a couple of years at this point. He's betting heavily on the upcoming console cycle release of the, PlayStation 5 and the Xbox One. So yeah, for the long term, he probably is, like me, seeing another bearish market setting in for the near future, maybe in the fall of this year. And so he's saving a lot of capital until then, 178 million out of 263 million. He's probably just saving it on the sidelines right now and waiting to swoop in and buy a lot of undervalued companies that'll crash heavily with another bearish market. And he's also talked a lot about how index funds have really, led to a mispricing in the market, similar to how CDOs did for housing back in 2008. So he's probably not, bullish completely here onwards. He's probably bullish on, say, a company like GameStop that, really doesn't depend that heavily on index funds, but, a company like Facebook or Boeing Facebook or Boeing especially are going to be heavily dependent on index funds, so I wouldn't imagine that those would be very long term for him. But yeah, that's just my personal take on this. Yeah, it's important to realize that he historically hasn't been actually a very long-term investor, kind of like Warren Buffett likes to buy and hold things forever. He's kind of the opposite of that. He doesn't like to hold on to things forever. He takes advantage of opportunities that he sees available, but then he'll get out of them as soon as he thinks that, that's about the extent as how good it is going to get. He'll get out of them then. So I hope you enjoyed this video. If you like it, yeah, please hit the subscribe button, and I hope to see you again.